The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
TGIF, everyone. Thank goodness it's Friday. Welcome to another edition of Breakout Investing on TFNN. That is my name, Ken Shreve. Breakout Investing now airs 5 days a week on TFNN from 3 to 4 Eastern, just before the Tom O'Brien Show, which goes 2 hours every day from 4 to 6 Eastern. Number to use to get through, 877-927-6648. One more time, 877-927-6648. If you can't listen live, you can pick my show up as a podcast on iTunes. And if you want to listen to the show on your smartphone, your handheld device, your Android device, iPhone, just type in TFNN.mobi, TFNN.mobi in your smartphone browser, and you can listen to the show that way as well. And if you want to look at charts with me, do that either on your PC or on your iPhone. Tiger TV. Tiger TV at TFNN.com. The show is carried live, Channel 1. You can listen to the show, look at the charts, and the show is archived on Channel 13. All right. Well, we're going to start today by taking a look at TLT. This is the iShares Barclays 20-plus year Treasury Bond Fund. Okay, an ETF that tracks the long bond here. And looky here, we're finally getting some heavy volume selling in bonds. And that has moved the yield on the 10-year note up to 1.55%. Yield on the 30-year note now at 2.64%. So I've been saying that, if we could get some continued selling in the bond market, and maybe that money funnels into the stock market, that would be a good thing. But as you can see, the TLT is still holding above a key support level here. It's 50-day moving average. TLT right now down 2.5% to 127.73. It's about a buck above its 50-day moving average right now. So too early to say that the TLT is ready to roll over here, but hey, we've got 2 straight days of bullish gains for the major averages. Let's take a look at the NASDAQ Composite, see where we are at now with about 50 minutes left to go in Friday's session. NASDAQ Composite outperforming nicely here, up 2.2%, 64 points to 29.57, approaching some key resistance levels here. So certainly, can't rule out a little mini breakout for the NASDAQ here, paying attention to this 29.88 level, right in this area here. 29.88 is the recent high that the NASDAQ's going to have to get over. But yesterday we possibly saw a shift in market character. We did get some pretty good juice behind the Nasdaq's move on Thursday. Volume came in slightly above average at almost 1.9 billion shares. This was during Thursday's session. That was so not only above average, but it did come in higher than Wednesday. So it was a good, strong day of accumulation for the Nasdaq Composite on Thursday. And then today, volume on the NYSE and Nasdaq has been picking up the pace as the session has wore on here. So it's possible we could see yet another accumulation day for the NASDAQ Composite here. So as a result of yesterday and today, I have been increasing long exposure in my Ultimate Growth Stocks model portfolio. If you want to check out how I'm navigating this market, you can get a 30-day free trial to Ultimate Growth Stocks, and you can do that right on the homepage of TFNN.com. In the carousel, you'll see Ken Shreve's Ultimate Growth Stocks. You can click on the Newsletters tab on the homepage, click Newsletters, and then Investment Newsletters. You'll find it in there. Or you can just go to KenShreve.com. That takes you to my TFNN info page. Click on the green banner and get 30 days free of Ultimate Growth Stocks. This is potentially an exciting time for the market here because we've got the Fed meeting next week. I don't know if the market's going to be up strongly again next week. I'd like to put a little bit of stock into the fact that we saw bullish day for the major averages yesterday, a potentially, a second straight day of bullish gains for the major averages today. But we know that this has been a whipsaw market environment. We know that signs of strength that we've seen in the major averages in the past haven't amounted to much. What is perhaps a little bit different this time around is that we are starting to see some heavy volume breakouts from, potential leaders that have been consolidating gains, and they are breaking out in massive volume. Okay, that is a good thing, and I'm going to kind of put my hat on that occurrence right now, realizing that I'm not exactly sure what the Fed is going to say Tuesday and Thursday. Again, the Wall Street Journal, John Hilsenrath over there came out and said that the Fed is very close to acting. I think at this point their hand is going to be forced. They're going to have to do something. Clearly the market has been pricing that in yesterday and today. Not to mention more news out of Europe. Today, ECB President Mario Draghi is reportedly considering ways to keep bond yields low in Spain and Italy. He's going to be speaking, I don't think he's talked yet, but he's going to be speaking with Bundesbank President about ideas to keep stubbornly high bond yields in Spain and Italy low. So market sentiment is improving, and we just have to take that for what it's worth, and I see no reason to increase some long exposure here, so I've been doing that. I now have 5 names in the Ultimate Growth Stocks model portfolio, and we will see what happens. So that's a look at the NASDAQ composite. Let's take a look at the S&P 500 here. Equally bullish day for the S&P 500. I like the fact that it's really keeping pace with the NASDAQ here. In other words, it's percentage gain. This is a more broad-based, or not more, but it's a broad-based index that is participating nicely here. Up 2% is the S&P 500. That's good for about 27.5 point gain. 1387 is the last price on the S&P 500. And notice that we do have a little mini breakout here for the S&P 500. It moved over a swing point today of 1380. So it's about 7 points above this swing point set right here. So bullish action in the S&P 500, and again, technically looking pretty strong here. We'll take a look at the Dow as well. This is obviously a much less broad-based index, but the Dow also breaking out today, up 1.6%, lagging the market a little bit to 13,095. So the Dow climbs above that psychologically important 13,000 level. So hey, we'll take it. We'll take it. Two days of nice gains for the market. Take a look at the SPY here. This is an ETF. If you want to go long the S&P 500, that's having a bullish day as well. Looking very similar to the S&P 500 chart here, up 2% to $138.86. So, seeing some decent setups out there, seeing some heavy volume breakouts. When the market is painting this type of picture, it does force a growth investor like myself to get long and to look at some of the higher quality stocks that are setting up out there. So we start by taking a look at Amazon today. Very bullish move for Amazon. We have been noting its a strong technical picture for several weeks on this show, but good solid breakout here, over $233 a share. Huge volume expansion for Amazon as well. The earnings, this company is not, delivering eye-popping earnings every time it reports. It's, widely documented that Amazon is spending a lot of money to expand not only their technology infrastructure, but also their distribution network. So they can be ready for potentially busy Christmas time, and they're really positioning themselves as the online retailer out there as they continue to take business from some of the other larger brick and mortar locations. But Amazon today up close to 8% to $237.30 $2.35. It made a penny a share, a little bit below estimates. I think estimate was for 2 cents or 3 cents a share. Sales were up 29% to $12.8 billion. That was a hair below estimates as well. But again, investors responding very, very positively to this report. And again, when you're seeing renewed signs of strength in the major averages, it makes sense to look at base breakouts like this, heavy volume moves from consolidation areas. Amazon had been consolidating gains for quite some time, all the way back to April and May. That's when the base started. And then again, you get a good, strong, heavy volume breakout today, over $233 a share. And when you see the volume expansion like what you're seeing in Amazon today, folks, this is not retail investors that are driving the move here. Heavy volume like this, big volume spike is normally the work of institutions, at least acquiring a position here. So bullish day for Amazon. Let's also take a look at Equinix. This was a stock I was looking at very closely yesterday. It's been a big leader for a while, but the stock is following through nicely today, up another 3.2% to 187.80. Now, I went back and forth yesterday about whether or not I wanted to buy a stock that was gapping up 12%, something like that. It never feels right to buy a gap up when a stock is up that big, but again, I've mentioned in the past I have had some success doing that. Intuitive Surgical, Priceline in recent years bought some gaps up that turned out to actually be pretty well-timed buys. But when you're seeing these base breakouts, which we are seeing right now, it's particularly good to see follow through the next day. If you're in an unhealthy market, sometimes you get a breakout and then you see a reversal the next day. I mean, that's unhealthy price action. But Equinix, the data center operator, is following through nicely today. Let's take a look at a weekly chart for Equinix, and this is really just a picture-perfect chart here. It's a good example of what a breakout from a base on base pattern looks like, and you'll see it's arguably still within buying range here. And I say that because if you're looking at it as a base on base pattern, the swing point was right around 178, I think it is, 178. So at 187, it's probably a little borderline extended here. You don't want to chase a breakout when it moves more than 4 to 5% past a swing point. So we'd have to do the quick math here. But this is one where if you do get a low volume pullback to support, that would probably give you another entry point. So the reason I did not buy Equinix yesterday, this is a stock that has a lot of qualities that I like to see. The reason I didn't buy it, there were a few reasons. If you look back on its weekly chart, there were 3 distribution weeks. So the accumulation distribution was a little out of whack with this stock. I like to see accumulation weeks outnumber distribution weeks. You had 3 distribution weeks, so that was a bit of a red flag. Earnings, there was a deceleration in sales growth, so there were some yellow flags where I decided to take a pass. But technically, it's a healthy stock. All right, folks, headed into the first break. Stick with me. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Ken Shreve with you on TFNN. Another reason for the market's nice performance today. Earlier today, not a great reading, but a better than expected reading in second quarter gross domestic product. That is this is the first estimate. There are going to be two more estimates to Q2 GDP, but the first estimate came in at 1.5%. That was better than expectations of 1.2%. Again, the economy grew at a rate of 1.9% in the first quarter. So, we're not talking, scare headlines will, talk about a double-dip recession and an employment picture that is dismal and it's not going to get any better. And, we'll just have to kind of take economic data as it comes. But, the reading on gross domestic product today was not bad, and the market is cheering that as well. So, a couple of story stocks today. Let's take a look at shares of Apple. They made a small acquisition today. Apple in a little bit of trouble here. It's trying to reclaim its 50-day moving average, but I've heard more than one person in recent days talking about how Apple could be set up here as a decent short. It is again above its 50-day moving average, so I would not short it here, especially with the market acting like it's been acting over the past two trading sessions. But Apple, clearly its latest earnings report, whether or not it's a one-off and they'll return to solid numbers in the next quarter remains to be seen, but it was a disappointing report by a lot of different metrics, but the stock is up 1.7% today to $585 a share. They announced a small acquisition. They're buying Authentic, ticker AUTH, for $8 a share. I think this is about a $350 million deal. Authentic is a fingerprint authentication or provider of fingerprint authentication technology. That's what Authentic does. Not out of the question here that Samsung, which is the world's largest maker of mobile phones at this point, could come in with a bid. So we'll see how that all shakes out. Interesting piece in Investors Business Daily late yesterday. Market research firm IDC came out and with cell phone shipment data, and Samsung shipped nearly twice as many smartphones as Apple in the second quarter. They increased their market share to 32.6%. Apple was second with a 16.9% market share. Samsung shipped 50.2 million smartphones in the second quarter, an increase of 173% from the second quarter of 2011. Apple shipped a respectable 26 million handsets last quarter, up 28%. So Samsung still in control of the cell phone market here. I know a lot of people that like their phones, actually. It seems like when people, get rid of their iPhone, they're going to Samsung. That's for sure. Taking a look at shares of Facebook today. Let's take a look at Facebook stock in a world of hurt. Not performing with the market today at all. Shares of Facebook down 11.5%. Just when you thought it couldn't get any worse for Facebook, down $3.08 to $23.76. $23.76. That's the last quote for Facebook. Social networking giant reported slowing revenue growth. Revenue growth has been decelerating for several quarters in a row. Sales were up 32% to $1.18 billion, just a hair above estimates. Earnings up 8%, I should say, to 14 cents a share. Monthly active users of 955 million, pretty much in line with forecasts. Some other metrics here. Mobile monthly users of Facebook rose 67% from a year ago to 543 million users. Advertising revenue up 28% versus a year ago to 992 million. Obviously, that's the lion's share of revenue. That was a little bit above expectations. More than half of Facebook users now access Facebook via wireless devices. So it's really about mobile. Mark Zuckerberg trying to talk up mobile, how the company has huge plans for mobile. Executing that strategy, though, is going to be difficult for Facebook, and the market's going to want to see proof that they're able to do it. It's probably going to be 2 or 3 quarters before that gets a little more visible, and that is why the stock is acting as weak as it is. So those are a couple of story stocks today. Taking a look at crude oil today, up 0.8% to $90.13 a barrel. Gold up a little bit, 0.2% to $16.18 an ounce. We'll check on the GLD as we head into our second break here. The Spider Gold Trust up 0.4% to 157.43. Working on 4 straight gains is the GLD. All right, folks, thanks very much for tuning in. We'll be back in about 3 to 4 minutes. Ken Shreve with you on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Checking in on the NASDAQ here, up 67 points now with little less than half hour to go in Friday's session. NASDAQ up 67 points, 2.3% to 2960. NASDAQ volume tracking a little bit higher than what we saw yesterday. So that's a good thing. Potentially another accumulation day for the tech index. Remember, NASDAQ volume yesterday was just under 1.9 billion shares, so the fact that it's tracking a little bit higher than that is a good sign. S&P 500 not far behind the NASDAQ composite. S&P up 2.1% to 1388, and the Dow lagging a little bit, but not by much, up 1.7% to 13,107. So another good day for the market. Investors headed into the weekend in a good mood, I bet, after 2 straight days of nice gains for the market. Let's take a look at some other earnings movers here. Let's take a look at Chevron. CVX came out with earnings before the open today. Oil and gas producer, refining company. Trying to come out of a little base here, over $109 a share. Chevron today hit a low of 107.13. It is now trading up 1.1% to 109.47. So again, Chevron going for a technical breakout here. Volume not particularly strong, but acting pretty well. Strong refining business at Chevron offset weaker oil prices in the quarter. Upstream oil and gas production profit fell 18% to $5.6 billion, but downstream refining operations saw an 80% jump in profit to $1.88 billion. Overall sales at Chevron fell 9% from a year ago to $62.6 billion. So Chevron participating, underperforming, but recovering nicely and well off its lows today. Let's also take a look at shares of Merck. Boy, has this one been a outstanding performer. A little bit of volume behind Merck's move today, outperforming nicely, up 3.8% to 44.97. This is an example of a stock that is not coming out of a base here. Tough to buy Merck. It consolidated for about, 7 or 8 days, something like that, and ahead of earnings and consolidated constructively, but it's certainly not a base. A good base, a good consolidation area is going to take usually a minimum of 4 to 5 weeks to take shape. So you just got a nice heavy volume move for Merck today. Not rip-roaring growth here. Earnings up 11%, sales up 1% to $12.3 billion. The earnings beat estimates, $1.05 beat estimates by 4 cents a share. Merck's diabetes drug, Januvia, continues to do pretty well. Sales of that drug up 36% from a year ago. Sales of Gardasil, which is an HPV vaccine. Was that HIV? That might be a typo. Anyway, sales of Gardasil climbed 17% from a year ago. Here's an interesting company, HMS, Health Management Systems. Nice little breakout trying to take shape for Health Management Systems. This is ticker HMSY on the NASDAQ. Big move for the stock today, up 9.2% to $34.47. Company provides cost containment, revenue recovery, benefit coordination to government health care programs. Earnings were up 35% from a year ago to 23 cents a share. Sales up 34% to just over $120 million. So you've got good volume in HMS today. Let's check in on the weekly chart here, HMSY, and you'll see this is a good example of a cup with handle pattern. It's not perfect, but the swing point here is 34.83. It is now trading slightly below that swing point, so not the most powerful of breakouts for HMSY, but a stock that could work. If this is more than just short covering, what we're seeing yesterday and today, and frankly that remains to be seen, because I'm sure part of yesterday's strength and today's strength are, shorts getting right with their positions. Remember, since July 10th in the NASDAQ Composite, we had quite a bit of distribution, quite a bit of higher volume declines in that index. So you've probably got some short positions being squared away yesterday and today. There's also a chance, though, that new money could be coming in from the sidelines. Remember, that is a process. So I put a little tweet out there earlier today. If you want to follow me on Twitter, you can do that at Ken Shreve, or just go to twitter.com/Ken Shreve. You can follow me there. But I tweeted earlier today that if you are underinvested, or if you're not in the market, or if you're still skeptical of this market, if indeed we are in the early stages of a decent move here, and I think there's a chance we could be. I'm going to stay optimistic, and if indeed we are, remember that it takes leadership usually takes at least 1, 2, up to 3 months to fully come out. So you want to pay attention yesterday, today, and in coming weeks to stocks that are acting well, stocks that are holding near highs, stocks that have been consolidating gains, stocks that are on the verge of breaking out of these consolidation areas. So, we mentioned a name like Equinix, EQIX, earlier in the program. A name like Amazon. AMZN breaking out of a base today. I've been getting some questions on Alexion, probably one of the best run drug makers out there. I mean, there's really hard to find anything wrong with this company's balance sheet, and its price performance has been, truly spectacular. It's working on 3 straight gains, and what you had with Alexion was a good solid breakout. The company recently reported another quarter of really strong bottom line and top line growth. This is a one drug company. Soliris is its main drug, which is used to treat a rare blood disorder. But Alexion up another 2.7% today to 109.02. Let's check in on the weekly chart for Alexion. This is a stock that I avoided. I mean, you did have a nice heavy volume breakout from a nice base. If you're watching in Tiger TV, you can see the start of the base. Back here over in March, April, it broke out and then formed what's called a kind of a high handle area here. And then it broke out over resistance. The issue I have with Alexion is I just feel like I'm buying in the potential later stages of a move. This is a stock that has probably formed a series of 4 to 5 bases over the past few years. You had a base down here it broke out of. You had a base here it broke out of. A base here it broke out of. Another base here it broke out of. So, at some point a stock's run comes to an end, and they tend to come in the end after they've broken out from a series of bases. So this is a classic example of a late stage base breakout. Now, some late-stage breakouts can continue to work. It's not like they're all destined to fail. But in Alexion's case, of course, I wish I had bought it in late 2011 when it broke out of a base here. But this is one that just that got by me. But a lot of people wondering, well, can it be bought up here? And the bottom line, I just think the risk outweighs the reward, and that is just following a rule of generally avoiding late stage base breakouts. Another name that I've talked about recently, let's take a look at Edwards Life Sciences. This is a company that makes products to treat advanced cardiovascular disorders, heart valves, and the like. Edwards Life Sciences today up 2.9% to 105.54. What I like about Edwards Life Sciences, and let's take a look at the weekly chart here, is it looks like you could have a stock that's trying to break out from a flat base structure. In other words, Edwards Life Sciences broke out strongly during this week right here, and then it has started to move sideways. Now, the recent high for Edwards Life Sciences is 104.63. This is a short base. I mean, it looks like it's been consolidating gains for about 5-6 weeks, but truly the consolidation is only a little over 3 weeks old. So I do like its technical action, though, and this is another stock that could have more left. It's ticker EW on the New York Stock Exchange. Good-looking technical pattern here. Take a look at generic drug maker Perrigo, PRGO. PRGO. This is another example of potentially another late-stage base. Here's a daily chart. Stock up 1.7% today to 116.01. Let's look at the weekly for Perrigo. And I'm just kind of giving you a little kind of insight into how I think about buying some of these stocks. Technically, Perrigo looks strong. Fundamentals are pretty good at Perrigo, but this is another example of a potential late-stage base. What you do have here is a breakout that took place last month, and you have the stock coming down and showing good supporting action at its 10-week moving average. Normally when a stock breaks out and you miss the breakout, and you can see Perrigo's breakout right in this area here. You see it shoots off to new highs. Volume is pretty good. Now it's pulling back, and it's firming up at its 10-week moving average. If you miss the breakout, and say you're normally going to maybe it's a 5 or 6% position. Well, if it finds support at its 10-week moving average, maybe you don't want to start with as big a position when you're buying off support at the 10-week moving average. So according to the buy rules I follow, Perrigo would still would be buyable here. I just wouldn't start with as big a position. The other issue, though, is this late-stage run issue, which is a very real issue to consider, especially when you're dealing with growth stocks that have been moving for a few years now. Mentioned on Tom's show yesterday, a stock that is up, 400, 500, 600, 7%, if not more, over a 2-year time frame. Chances are you're dealing with a late stage run here, and again, they're just a little more risky. So even though Perigo's weekly chart might look like it's got potential here, it still could. I'm just wary of a possible late stage move here. Check in on shares of Cyberonics as well. This is a lot less liquid than a Perigo or an Edwards Life Sciences. Cyberonics has a market cap of $1.2 billion, so it's a small cap stock. Not the most liquid of stocks. It has an average daily volume close to 300,000 shares. But I do like the way this is trading. I do like its product, and I do like the growth in recent quarters. So it does bring a lot to the table in terms of fundamentals and technicals. Shares of Cyberonics up 2.7% today to $44.60. $44.60. Let's take a look at a weekly chart for Cyberonics, and this is another interesting stock here, because here you can see with this blue line, I underlined sort of the base it recently broke out from, and now you've got an example of 10-week support here. Okay, so breakout, pulls down to its 10-week moving average, finds support. So Cyberonics also acting well here. Now, this is an example of a stock that is not a late stage move. Okay, don't feel like you're chasing in an example like this. So Cyberonics still looks pretty good here. And let's take a look at NetSuite too. NetSuite, this is another one. Their earnings were solid, just a gap up. It's now up 15, 16%. I mean, just a good, solid, heavy volume breakout for NetSuite. Now, who do you think of when you think of on-demand customer relationship management software? It's Salesforce, right? CRM. Let's take a look at CRM. We'll see that this is a stock that still can't get out of its own way. It's up 5.7% today to 131.74, but look at all the problems it's having. Resistance at its 50-day moving average, far off its high, just not a leadership stock anymore. On the other hand, you have NetSuite. NetSuite came out with earnings either late yesterday or early today, but the stock is obviously responding very positively, trading up 15.7% to 57.17. Despite a huge move, when you look at its technical structure, it to me still looks like it's within range here, and that's counterintuitive, I know, but if you're in the early stages of an uptrend, you're seeing signs of accumulation in the major averages, you want to look at some of these stocks that are showing accumulation and that are coming out of basis here. So let's take a look at a weekly chart for NetSuite, and you do have a base breakout here. Okay, or you could call it support at the 10-week moving average. I would call this a cup with a high handle. Okay, cup with a high handle with a recent breakout over, call it $55, $55 a share. Actually, it might be 56.06. So at 57.18, I don't think the train has left the station here. NetSuite, again, on-demand CRM software. It also provides enterprise resource planning, ERP software. So earnings were up 200% from a year ago to 6 cents a share. Sales up 29% to $74.7 million. A good argument can be made that NetSuite could be an emerging leader. Now, here's the kicker with NetSuite. Full year earnings this year in 2012 supposed to come in at 21 cents a share. That would be up 40% from 2011. Next year, you're looking at accelerating growth. 34 cents a share they're supposed to earn in 2013. That would be up 62% from this year. So very bright growth prospects at NetSuite. This is a good base here, potentially looking at an emerging leader. All right, folks, headed into the final break. These shows go by quickly. Ken Shreve with you, Breakout Investing. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pezzavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, as we head into the close here. Boy, you'd think the U.S. dollar index would be taking a beating today with all the gains that we've seen in the market, but that's not really the case. The greenback index, 82.69, down about 12 ticks or so. check in on the UUP. This is an ETF comprised of a bunch of long U.S. dollar contracts. Closed maybe just a hair below its 50-day moving average. Today it's down another 2 cents today, 22.73, but it is near its session high. The 50-day moving average for the UUP is at 22.76. Again, right now trading at 22.73. So UUP underneath its 50-day moving average, an area where UUP has found support in recent weeks. So will it stay below the 50-day line? The longer it stays below the 50-day moving average, more weakness that might be one might expect in the U.S. dollar. So let's take a look at the NASDAQ composite as we head into the close here. Right now, the tech index is holding gains nicely up near its session high. Still hasn't broken out yet. Up 62.5 points, 2.2% to 29.55. S&P 500 also holding gains nicely. Nice little breakout for the S&P 500 today, up 1.9% to 1386. And a breakout for the Dow as it crosses the 13,000 level. Currently trading around 13,082, up 1.5%. Lagging a little bit, but Dow's chart doesn't look too bad here. All right, busy week next week. Like I said, we've got the two-day Fed meeting concludes on Wednesday. It starts on Tuesday, ends on Wednesday. We'll get the rate decision on Wednesday, and also probably more color on stimulus. We may even get a specifics about what the next round of stimulus will look like from the Fed. We better get something, because that's what the market has been pricing in over the past couple of days. So I can't see the Fed not doing anything at this point. If they do nothing, that may not be good news for the market, but hey, anything's possible at this point. Coming up Friday, we've got non-farm payrolls. I don't have estimate data, but we're looking at 2 straight months in May and June of very, very disappointing jobs growth. Nothing really pointing to a solid month this time around. But what we're seeing in the market, I mean, the market, is often counterintuitive. I've said it 100 times, but the market is often counterintuitive, and it goes up when it doesn't seem like it should be going up. So we have to be prepared here. We have to take what the market is giving to us. And again, I've been increasing long exposure, not aggressively, but enough to feel like I have some exposure to the market here. Again, if you want to get a 30-day free trial to Ultimate Growth Stocks, you can do that. Just go to kenshreve.com. That takes you over to my TFNN page. Very easy. Click the green banner, fill out your information, and you can get 30 days free of my newsletter. You can also follow me on Twitter at Ken Shreve, at Ken Shreve, KENSHREVE. And you can follow some of my market insight there as well. So Fed meeting, jobs report next week. Coming up in terms of earnings on Monday. Take a look at Seagate Technology here. They're going to be coming out with earnings on Monday. Remember, Western Digital had a big day. Both stocks had a very big day on Thursday after Western Digital reported big top line and bottom line growth. Same thing expected at Seagate. They could be looking at revenues there up 60% from a year ago. Triple-digit earnings growth. So we'll see how Seagate trades on Monday after it reports earnings. Also earnings next week on Tuesday. Pfizer, Coach, SourceFire, and later in the week on Thursday, LinkedIn. Stock's been under pressure, partly due to Facebook, but another big quarter of growth expected at LinkedIn, LNKD. They're going to be coming out with earnings on Thursday. MasterCard next week as well on Wednesday. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. I'll be back with another edition of Breakout Investing Monday, 3 o'clock Eastern. Have a great weekend, everyone.